Hello class and welcome back. This lesson is the last lesson in section 3, and our goal today is to walk through part B of the tax story using Bill and Janet as an example for you to follow as you move forward and fill out your tax story. In previous lessons we filled out together part A, talked about your income sources, and invited you to fill out part A of this tax story. So go ahead and pull out your tax story worksheet at this time and make sure that you've taken a few minutes and put forth some effort to fill out the income sections of your part A in your tax story. Now what we're going to do is use Bill and Janet's tax story as a framework or an example to walk through how to gather together and calculate the numbers for part B, which are your taxes. Now, I absolutely acknowledge right here and now that all of us that are going through this class are not CPAs or professional tax consultants or tax preparers. And so what we've done is created, as much as we can, a simplified tax tool that will help you in the comfort of your home walk through each of these chapters, whether current and or into the future, and determine with some level of accuracy based off of current tax rules where you'll be at with your adjusted gross income, your deductions, your taxable income, and your tax rates. Fair enough? Okay, well let's dive into it then. I don't want to retell all of Bill and Janet's story, but I want to highlight a couple of their chapters in their tax story just so again we're on the same page. So if you recall from lesson or section 1 in this masterclass that Bill and Janet, when they were at the age of 55, were considering their retirement plan and wanted to spell out for themselves what their tax future might look like. So at 55, this is their first chapter in their tax story, they had identified that they had taxable wages of $100,000. They have rental income, taxable rental income that was coming in at $10,000. They had several items that they were counting as itemized deductions in their tax brackets, right? In their next chapter at the age of 65, they had planned on retiring and both quitting their jobs and turning on their pension and Social Security benefits. Of course, their rental income would still continue in this chapter. And then into their final chapter, their RMD chapter at the age of 70, their Social Security, the pension, and their rental income would still be there. However, this $41,000 of a required minimum distribution was now the additional element inside of their tax story. So we're going to use this. Hopefully you've identified yours, and we're going to go at it. The tool that we're going to use to calculate all the numbers for part B is actually found on our website. So if you want to go to brighterwealth.com/1040, that link is also available in the resource section of this lesson. You will come to this website right here. Now this is on the back end of our website, so you can only access it directly through that link, but you'll be able to see this 1040 calculator that we've created and customized a little bit for this retirement taxation masterclass. So this calculator is actually a fully functioning 1040 calculator that any CPA could use to calculate a pretty complex tax return. However, we've done a few things, and I'll walk you through how to simplify it for the use that we are looking for. So all of these sections right here, when you click on them, they'll actually drop down several pieces of information they'll be used to add into your 1040 estimator. Now we're only going to use a couple of these, so I wanted to walk through them briefly. Filing status is merely just selecting in this drop-down menu if you're married and filing jointly, or single, or head of household, married, filing separately, or qualified widower. But that's where you find that drop-down menu. If you still have any dependents, you can put those in there. In income, you'll notice there's many options for income that you could select in here. If you'll notice, there's just a few that are highlighted in white. Those are the corresponding sections that are going to match up with your tax story. So if you see here wages, if you go back to your tax story, look at that, wages. And then if you see IRA, 401k withdrawals, pension, annuity, rental income, Social Security. Those are also all of these primary and larger and typical topics or income sources that you'll have. Now, we want to acknowledge that many of you, the students going through this class, have very unique and oftentimes complicated tax returns. So as you go through your 1040 from last year that your accountant had filed for you, feel free to customize it as much as you want and fill in all of these little additional sources of income that you might see in your 1040. For the purpose of this class, we're going to simplify everything quite a bit, and I think it will still apply to most of you. And so that's what that income is. If you go to adjusted gross income, this is going to tell us this number right here. This adjusted gross income is your AGI, which is this number. Your deductions, once we come to a number here, that will be that number. And then your taxable income will be on this line as well. And so we're going to keep things simple as we go through, but I do want to go through each one of these chapters and fill this out. Feel free to use these instructions and example to follow along in yours. So let's start right here at the beginning of the age 55 tax story for Bill and Janet. So $100,000 in wages and $10,000 in rental income. So we'll go over here. Bill and Janet are married, filing jointly. Income, we're going to do $100,000 of wages. Then we're going to go down here and put $10,000 of rental income. For simplicity, I'm going to close that. So that gives me my adjusted gross income of $110,000. So we're going to go over here. So we have $110,000. And then we'll go down to this next section, which is deductions. We'll come down here. Now, Bill and Janet, if you remember from their tax story, they had $10,000 in taxes paid, so general, state, and local. So these are your SALT taxes that we talked about in section 1. So this is your property taxes on your home, your state income taxes, and any other local taxes that you paid. So for Bill and Janet, in that tax year, they had about $10,000 that they paid. They also had $10,000 of interest on their primary mortgage, and we're going to put that there. And then they had a $15,000 charitable gift that they paid to their church through a tithe. And so you'll see this calculate those up to $35,000. Now that is for them their their itemized deduction. You see their standard deduction is $24,400. So if they would have paid no charitable giving and no interest, they would have still been able to write off $24,400. And then but their itemized deductions were larger, so that's where that $35,000 comes in. So if you want to, we can go back over here and write $35,000. Now we go down to their taxable income. At this point, this has already calculated this for us. So this taxable income line right here of $75,000, I put in here. And then their Social Security tax, if you notice, they're not taking any Social Security yet, and so that is not applicable yet. We'll talk about that in the next chapter. Their effective marginal rate, we'll go back over here to explain that, meaning that if they took one more dollar of income, this is the tax bracket that they would be in. So if I'll highlight this so you can see. So this puts them in the 12% bracket, meaning with a taxable income of $75,000, any additional dollars is going to be taxed at that 12%. So our calculator has a lot of information. So if you want to go down here, you can also see these are the tax rates and tax brackets for 2019. So if we go to the 12%, you'll see every dollar from 0 to 19,000 is taxed at 10%, and then every dollar from 19,400 to 78,950 is taxed at 12%. So that's why when we say they're in a 12% bracket, they still have $1,000 or so to go up into the 12% bracket. Actually more than that. So they're $75,000 up to $78,950. So let's take that 12%. Let's go back over here and add it to our worksheet. So they're at a 12% bracket. And then this bracket space, if you recall from earlier in this lesson, this is how much they have left in that 12% bracket before they go into another tax bracket. So if we take these numbers, 78,950, and minus that 75,000, that would give us the remaining space inside of that bracket before they jump into the 22%. So $3,950 in the 12% bracket. Okay? So that's how we kind of go through and calculate those numbers inside of that tax story. Now let's continue on and readjust these numbers. So start back at the top, filing status, they're still married, filing jointly. Here we got rid of their wages and we replaced that with $30,000 of a pension and $30,000 of their Social Security. Their rental income stayed the same. So if you go down here, we'll now see, close this out so kind of simplify it. We'll now see that their adjusted gross income is this $55,350. So adjusted gross income, $55,350. Now let's talk about their deductions, because their deductions change a little bit here. If we go down to their deductions, they actually paid off their home before they're retired, so they have no more interest that they're paying there. And their income went from $110,000 down to $70,000, and they paid less of a tithe. So let's say that they paid 10%, so they paid about $7,000 as a gift to charity. And so you can see now that their standard deduction is now higher than the actual $17,000 to be an itemized deduction. So naturally they would take the $24,400 standard deduction. However, one more thing is at play here. Inside of their Social Security years, they're now 65 years old. So if you want to check both Bill and both Janet as being over or 65 or older, that brings their standard deduction up to $27,000. And so inside of their tax year, see they're over 65, we'll put $27,000 as their now standard deduction. For their taxable income, we'll just go right here, taxable income, $28,350. $28,350. Now we can actually calculate how much of their Social Security taxes they're paying on their Social Security. So if you go over here, it's not a line item. I wish it was inside of this calculator. However, if you go to income, and down here to Social Security, remember we put in that $30,000. Below that, that will tell you taxable Social Security benefits of $15,350. So this is how much of your Social Security is actually being taxed. So if you take this $15,350 and divide it by this $30,000, what you'll actually get on your calculator is this 51%. Meaning 51% of Bill and Janet's Social Security benefits were taxed. The goal really is to reduce that over time, as you'll see as we go through this class. Now let's see what marginal effective rate they're in. Bill and Janet were both surprised to see that they were still in this 12% bracket. Albeit they're lower in the bracket, they're still in that 12% bracket. So we'll put 12% here. Now, how much bracket space do they have inside of their 12% bracket? If you remember, we can go over and see inside of their bracket, the top of the bracket is $78,950. So if we take the top of the bracket, $78,950, and minus their taxable income, this $28,350, we'll actually get $50,600. Meaning they could take $50,600 more dollars as 100% taxable income and still only pay a marginal effective rate of 12%. That's great. As you'll see in the next few sections, that's a tax planning opportunity to maximize this lower bracket for them. All right, so that finishes their Social Security Start Years chapter. Let's go on to their RMD years. So let's adjust a few of these. If we go back up into income, remember the only thing that's changing for them is in this year they're now forced to take a $41,000 required minimum distribution from their IRA. So let's see how this affects their numbers down here. Now, this has jumped their adjusted gross income up to $106,500. So $106,500. Now, their deductions, have they changed at all? They're actually the same. So they'll continue to make their charitable contributions. However, it's all within that standard deduction of $27,000. Okay, taxable income, let's look how that shifted over time. So now you can see their taxable income was bumped up to $79,500. $79,500. The primary driver is this RMD that they were required to take out that year. So for their Social Security tax, let's see how much of an impact that made on there. And we'll cover these numbers again in the impact section following this section of class. So we'll go to their income, go down here to Social Security. So they're still getting the same $30,000 of Social Security, but now you'll see that $25,500 is taxable. So if we take $25,500 and divide it by 30,000, you'll actually get 85%. So for Bill and Janet, to their dismay, they're now maximizing the percentage of their Social Security that's taxed. If you go back over here, we'll now see that because of that RMD, now they're in this 22% marginal rate, this 22% bracket. Now, they're not too much into it because if you see their $79,500 is where they're at in taxable income, they've just barely crested over into this 22% bracket. So how much bracket space is in there? So they're currently in a 22% for all new dollars. How much bracket space is in there? We'll take the 168,000 because that's the next bracket. They're inside of their current bracket. 168,400 minus their 79,500, and that would let us know that they have 88,900 in the 22% bracket. So as we can see, now that we've filled up this part B of their tax story, there's a few takeaways that we're again going to talk about further in class, but I just have to mention them now because they're so important. You can see that in their working years and in their Social Security years, they're in this 12% bracket and then bumped up into this 22% bracket if taxes stay the same for the rest of their tax filing existence. And so anytime we have a higher tax bracket later on in life, we want to maximize some of those lower brackets in these years. And I'll give you a hint for the next section of this class. This is a big opportunity for Bill and Janet to pay 12% now to potentially avoid paying higher percentages of taxes later. All right. Well, that concludes this section or this lesson and also this section because this is the last section of this class. So moving forward, I encourage you to again work through and become familiar with this tax calculator and fill out part B of this worksheet, because in the following sections we're going to use this information for income, this information for taxes to start making decisions for yourself. When is a good time to continue to contribute to your Roth IRAs and your IRAs and use a few of these charitable giving strategies in retirement. So thank you so much for joining us inside of this lesson, and we will see you in the next section.